AI bubble is something that's been talked about right now, and as venture capital professionals, everyone's thinking about it, and therefore they are probably a little bit more cautious. We've all seen these headlines in the news of companies raising $200 million on $1 billion valuation. So it sounds a little too frothy, sounds a little too rich. The bar for startups to build to a point to differentiate themselves is higher, and to compete for capital at a reasonable valuation is also higher. All of these foundation models, they basically exhausted all the publicly available data out there. Being able to access and train small, medium-sized LLM or train your own model based on proprietary data, that will give you defensibility. Building something for a very niche industry that makes it harder for OpenAI or Claude to touch or Anthropic to touch is very important. So for startups, they need to build super fast, they need to go to market super fast, and they need to scream as loud as they can to get your attention, because it's all about attention economy.
You're watching today's podcast. I'm Boyuan. If you enjoy deep conversation about building the future of technology and startups, please subscribe and stay updated. Hey, what's up, everyone? Welcome to today's AI. I'm Boyuan. In every tech cycle, there's a moment where ideas stop being experimental and starts defining the next decade. AI feels exactly like that moment right now. Today, I'm joined by Sophia Zhao. She's a partner at Alumni Ventures, one of the driving forces behind their new AI First Fund. This is a fund built entirely around companies where AI isn't just a feature, it's a foundation. Alumni Ventures are one of the most active VCs in the US, with over 1,600 portfolio companies and co-investments alongside Sequoia, A16Z, and Y Combinator. Welcome, Sophia.
Yeah, thank you very much. Hi, everyone. Thank you, Boyuan, for hosting, and thank you very much for having me. Great to meet you all.
Yeah, Sophia, maybe let's get started with your background first. So you started your career in crypto and fintech before stepping into AI investment. So what pulled you into this new venture, this new frontier?
Yeah, for sure. Let's go way back in time. So my background is actually in both finance and startups. I work with a lot of different CXOs and entrepreneurs in the past, in the capacity of corporate banking, capital advisory, BD and operations, and oftentimes cross-border. So these experiences really allow me to build a pattern recognition of what it takes to build a successful company, as well as forming a global perspective. I joined Alumni Ventures back in 2021 after spending a few years in blockchain, working with Web3 merchant banks such as Galaxy Digital. I spent a year at crypto exchange Huobi US in San Francisco, and then Crypto.com. So as an investor, I truly enjoy being plugged into these different hackathons, accelerators, tech clubs, like Techstars, like Yale's Innovation Center, Ethereum Global, etc. So I'm educated in both Canada and the US, and I graduated from Yale School of Management in 2017. So I started in crypto in 2018 because during a coursework, we were helping a VC diving deep into different verticals, including blockchain and AI. So I did some deep research into blockchain. I purchased my first crypto in 2017 and later exited. That really helped me pay some of my student debt, and then I became a believer. So I've been focused on investing in Web3 since 2021 after I joined Alumni Ventures blockchain fund. And over the years, we made some, decent investment. Everyone's pretty happy with our performance, and we've been entrusted to then being staff on the AI fund. So currently I am also looking after our investment in our AI fund, specifically for a newly launched fund, which is the AI First Fund, and prioritizing opportunities at the C to Series A stage.
So before we dive into your new AI First Fund, maybe let's talk about your experience as an investor working across different regions and cultures. So you work across Asia, Canada, and the US. So I'm curious, from your view, how do founders and investors approach AI differently in these places?
Yeah, that's super interesting. I've had exposure in Asia, US, and Canada, and it's quite interesting comparing and contrasting the three different regions. Maybe starting with Asia. For example, for Asian VCs or just the way of doing business in Asia, it's very collective, very relationship driven. So everything is built on trust. You're building relationship for the long term. You're aligning your interests before any transaction is done. So in Asia, founders and VCs sort of rely on their network to help validate, hey, how do you think about this project? Is this VC someone that you recommend working with? So that's sort of how the relationship is being prioritized because network builds trust and trust is what anchors relationships. In terms of the type of startups, gaming and entertainment is very popular, especially in China, Japan, Korea, and Southeast Asia, because the industry is quite deeply rooted in K-pop, for example, anime, and gaming. And we can also see fintech and super apps, especially in Southeast Asia, like consumer fintech, payment, neobanks, they tend to dominate early stage funding. And for China, even though fintech is now more regulated, but legacy giants like Ant Financial, Tencent, they have a huge influence on the ecosystem. I find capital is less patient versus capital in North America.
Yeah, so they expected faster returns or invested in startups where signals are a little bit stronger.
Yeah, they tend to want to see returns a little faster than other regions. So that's what I would share about what is it like in Asia. I think for Canada, the keyword is a lot more conservative. I think there's a more balanced approach to risk appetite. You can see more cautiousness, like they analyze more, but they're definitely a lot more open than the Asian counterparts. I think the community focuses more on sustainability, inclusion, and long-term value creation. And then naturally, because of that, then in terms of the industry, you're looking at clean tech, climate tech, because both of these are supported by public policy, and there's a lot of government co-funding that can go into supporting those startups, as well as health tech, life sciences. There's a lot of strength in biotech, genome tech, digital health, etc. And I think a lot of people are not aware that Canada is actually a AI powerhouse, especially in Toronto and Montreal. We've invested in a Canadian LLM called Cohere. It is born in Canada, but it's actually a foundation model company that's serving the world, prioritizing enterprise users. So that's an example of a huge AI player that's came out of the Canada ecosystem.
Yeah, Cohere is another foundational model company. It's kind of low profile compared to OpenAI or Anthropic. It's focusing on mostly enterprise customers and it's got a quite a strong profitability.
Yeah, and I think it's good that foundation models are not just concentrating in one country. We see Mistral in France, so I think over time it's great to see some diversity in terms of these foundation players. So yeah, that's an example of Canada as a AI player within our AI market. Maybe in terms of the approach. I think people are a lot more, okay, let's focus on prototyping, let's focus on, getting some revenue. So I feel like the Canadian companies tend to approach it a little bit more steadier than the US counterpart. And not to mention Shopify is also a Canadian legacy in a way, 'cause that's a B2B company.
Yeah, Shopify recently has also rolled out a few AI native commerce features, and it's actively partnering with AI and the crypto native startups.
Yeah, absolutely. And then if you're looking at US, this is the fun part. Everything is fast. I think the move fast and break things mentality is still very prevalent, especially in the Valley. And there's a lot more prioritization on, hey, success is tied to the founder's charisma and storytelling abilities. and the VCs are a lot more willing to place big bets with, uncertain outcomes for outsized returns. And everything's faster in the valley. And I don't know if you listened to the not recent, but there's 20 VC episode podcasts interviewing some of the European founders, and the underlining narrative is the same, that they came to the valley to raise capital because things are just done faster and a lot more efficient. So over here, I feel like we're just prioritizing on bit scaling. We're prioritizing growth over profitability. And with that, the exit expectation is that you IPO, or you have like over $1 billion acquisition within the next 5 to 8 years, which is really interesting. And I do find US often shape global investment patterns. And fun fact, like CB Insight, according to a recent CB Insight quarterly report, US is the leader in the total number of deals that's done this year. 7 of the largest rounds were based in the US, including Anthropic, OpenAI, Databricks, and Figure. So it's a vibrant market here.
Yeah, US is definitely leading and shaping how AI is evolving, especially given the sheer size of capital concentrated in the VC and tech ecosystems. So I want to dive into Alumni Ventures' investment thesis. You've had a very strong track record of successful exits, and your portfolio spans everything from AI infra to applications to even crypto projects. So, what made Alumni Ventures so unique? And also, what led you to create an AI first fund?
Yeah, absolutely. I think our model is very unique because number one, we give retail accredited investors access to venture investment that are historically very hard to access unless you're an institutional investor. So we provide that unique entry point. And then secondly is we are connected to all the top universities in Ivy Leagues like Harvard, Yale, MIT, Stanford, UCLA, etc. I went to Yale for grad school, so I'm plugged into the Yale community. We have this huge network of people, including over 1,600 portfolio companies, that becomes a network for our founders and our partners because everyone's looking for adoption. They're looking to hire. They're looking to partner. So we don't bring the capital; we bring the network to help our portcos grow. So that's super unique. Plus, we're stage agnostic and we're sector agnostic. So that gives us a lot of flexibility to get in on interesting deals that are co-invested with A16Z, Sequoia, Founders Fund, Khosla, etc. So we're very unique in that perspective. And now we're launching this AI first fund. And thank you for highlighting that we did a lot of big infra projects like Groq, like Cohere, like Lambda, like Together AI. And now we feel that there's a lot of opportunities that are at the industry level, in the science sector, that are also for the knowledge workers, or continue new ways of AI tooling for further infra improvement, etc. So there's a lot of experimentation, innovation at the very early stage now that we have a lot of foundational tools that we can build upon. So we're looking at C to Series A stage of companies that are being an AI first knowledge worker tool, being an AI first industry application, an AI tool discovery, whether it's like a AI chip, or how do you optimize and make very clunky, for example, healthcare backend a little bit more better. Interesting opportunities like that.
So, in my past episodes, we've been talking a lot about what AI native companies could be. And it seems to me that everyone nowadays is trying to call themselves AI native or AI first. And the term gets thrown around quite a bit. I'm wondering from your point of view, what does an AI native company really look like?
Yeah. Maybe I can use our portfolio company as an example. Literally today, OneMind announced their 30 million Series A. led by an amazing woman founder, Amanda Callow. So we've invested alongside Battery Venture, Wing Venture, Primary Venture, and a lot of amazing investors. So essentially, One Mind is building this AI superhuman teammate that actually does the sales job and not just assisting a sales staff. Because when you think about it, like, what is a modern B2B go to market? It's a little broken for a lot of people. For example, sellers are stuck choosing between growth and efficiency. Buyers are waiting days for answers that should take minutes. And a lot of buyers choose whoever responds first because everyone's time is precious and our attention is very limited. So most company can't really deliver that, not because of lack of effort, because as humans, we have limitation in terms of time, capacity, and recall. So for One Mind, they are building these AI superhumans. They're not building copilots. They're not building a wrapper. They are creating this full digital teammate with a face, voice, personality, and a full go-to-market brain. So there literally is the AI work for you. They're on 24/7. They can join video calls, they can give demos, they can take actions. So they're now starting to replace the chatbots and SDRs. Um, so essentially, this is not an assistant tool, but this is the actual AI as your sales teammate. So to us, this is very AI first. And this is almost like the future.
Yeah, I can definitely see there's a massive demand on B2B sales side, especially for startups. When founders are moving into enterprise or B2B, they need to either hire a sales team or upskill themselves in order to do the B2B sales. And despite there's another layer for enterprise compliance and trust. So having an AI native sales team feels like a real value add for early stage companies or B2B companies.
Yeah, definitely. So that is more of a almost like a full stack AI innovation. But there's also like another example would be our investment into Toma AI. We invested at the seed stage, and a couple months ago, A16Z came in and took the entire Series A round. So Tama AI is building AI agent for the automobile retail industry. As you can imagine, like there's these car dealer shops in our neighborhood, and they what's surprising is they actually miss 45% of its inbound calls, which is significant because they just don't have a way of handling customer communication. Like when you call the car dealer shop, it's a landline. Then you have an operator, and it's like one for sale, two for service, stuff like that. So Tama is building this new voice AI that doesn't just sound like human, but work like our employees to really personalize to every dealership. So it's not one size fit all. They're trained on the data and workflow specific to that particular dealership. They can delight customers and they can save staff a lot of hours so the staff can focus on what really moved the needle versus the mundane work that could be automated. So this is another example of company that's thinking AI first for an industry application because car dealership is a very sleepy industry.
Yeah, it's interesting that some of the best companies aren't always in the spotlight. I think Toma is a very good example that it's transforming traditional capital intensive industries behind the scene. So Toma is also backed by YC, right? You guys co-invested it at an early stage.
That's right. Yeah, we joined YC in Thomas seed round last year. And maybe just a quick call to action for our portfolio company. If they're looking for great senior and staff engineers that's working on platform or product, they're also looking for product designers. So if you or if the audience, you or you know someone who might be a great candidate for the team, they're looking to grow and they would love amazing human talent to join the team.
So now let's shift gear a little bit. Alumni Venture is known for co-investing alongside a strong network of top VC firms. So for an angel investor like me, how can I participate in the AI first round and capture some of the great deals?
Well, thank you very much for asking that question. We have this AI first syndicate on our website, av.vc. So it is free to join. You're not obligated to invest in anything. You're just free to join the community. Every month, you'll get maybe one or two deals that we are participating in. So for you, it's a great learning experience to see what's new and exciting, as well as we'll be sharing our diligence, publish our investment memos, so you get to see how we evaluate deals as a way for a retail investor to have their own framework or build their own framework of how to evaluate these opportunities. So I think it's a great learning experience for anyone looking to learn more about AI, what's happening, as well as learn more about how to approach investment. So I encourage you to join our AI First Syndicate. Free to join.
So let's take a step back. I want to ask a tough question. According to an MIT recent report that 95% of generative AI pilots are failing. And if you look at the current market, a lot of these current momentum feels like a circular momentum. Like, for instance, the AI startup valuations are getting higher and higher because the hyperscalers are pouring billions of dollars into these companies. And at the same time, these AI startups, they spend most of their capital to buy back the compute power from the hyperscalers. So how do you see the current market? And are we close to the AGI or are we close to the AI bubble?
Well, that is a very tough question. Thank you for asking. I feel like there's a lot of concern about, okay, well, where are we in terms of AI development and where are we in terms of AI adoption? Me being in AI every day in and out, I feel like I'm inside a bit of a bubble because I'm a power AI user. I use all the foundation model tools. I'm experimenting with AI note takers. I am trying out these AI videos, content creators, and to me, this is so exciting because I can see how it frees up my time so I could use my time on more strategic things that I enjoy that only I can move the needle on. So as an AI power user, I love it. And I'm also experimenting with vibe coding with Cursor. But when I speak with people that are not in the AI industry or pay close attention to AI, and I do feel there's a bit of a delta in the rate of adoption and the extent of adoption. I ask people around me, whether it's my hairdresser or high school people, because I volunteer to deliver financial literacy courses at high school. Just everyday people, when I ask them, like, how do you think about AI? They're like, well, I've only heard about ChatGPT. I use it sometimes, but I don't use it that much. So there's a huge disconnect of where I think we are versus maybe people outside of the AI circle are actually are. But nonetheless, I'm very excited about this because right now we've done so much research. There's a very mature foundation architecture, like transformers, like RLHF. They're largely established. So now, we're building on top of this. There's a lot more interest in exploring AI, investing in AI. But in terms of the AGI specifically, I don't think we're close to it in a general, meaningful sense. The current systems are very powerful, but they don't have that genuine reasoning, planning, and world modeling capabilities. For example, if we think about autonomous driving, 0 to 5, so 0 is like fully, driver has a full control of the vehicle at all time. That's like zero automation. Then there's the automation level 1, driver assistant, and there's a partial driving automation. So Waymo is there, it's full automating driving experience. But I think in terms of AI, we're probably between 1 and 2 right now. We're not fully at the full autonomous stage, but that stage is coming for sure. And then maybe on the tough part of your question of AI bubble, I I will have to think about it because I definitely have been reading articles of discussing AI bubble. I talked about it with our team, but there's also a real revenue from a lot of the companies that we back. So we're still formulating how we think about this.
Yeah, exactly. I think you have to be a power user to understand where we actually are and spot which AI products are going to have the same powers versus the ones that just a brief fed. And if you ask the general public what AI is, you might get 1,000 answers, right? Like AI as a chatbot, or AI is just an image generation tool, or it's an automation tool. I don't think AI is going to stop at chatbots, which is quite a prevalent UI UX at the moment. I think it's just a starting point. So I want to know from your perspective as a power user, what are the signals when you're using those AI products? What features or UI UX tell you that this might be a great product and or even this might be a good investment opportunity?
Personally, I feel like maybe from a usage versus like investment perspective, from a usage perspective, um, let's just use like the image editing app. If you go to the App Store, there's a ton of beauty cam, um, camera for, I don't know, putting your baby in like a cute pumpkin, stuff like that. So as a user, if your whole purpose is to just have a cute Halloween costume for your baby, that simple tool fulfills your need and you're okay with that. As an investor, I think when we're looking at AI tools, I think the top three things that we look for is, I think, for example, one, the data moat, because all of these foundation models, they basically exhausted all the publicly available data out there. And I think being able to access and train small, medium-sized LLM or train your own model based on proprietary data, that will give you defensibility against these big LLMs. So having some sort of data moat and having that continuous access to that specific type of data will reinforce your moat over time. So that's definitely number one. Number two, related to number one, is some sort of niche industry that you're in. Like, for example, we've seen Harvey AI and Logora AI. These are AI tools for law firms. If you look into what they're doing, is they are basically building their defensibility around an industry that is highly sensitive to confidentiality, IP. So, you know, building something for a very niche industry that makes it harder for OpenAI or Claude to touch or Anthropic to touch is very important. As well as like partnership. If you have some sort of proprietary partnership with NVIDIA or partnership with Intel, partnership with whatever industry that you're going after and the key players of that industry that give you additional moat over other players. If I'm using an AI tool, I hate to download a new app and open it every time I need to use it. I will love for it to be already integrated as part of my workflow. For example, HubSpot have this AI agent, or even Gmail has these little AI capabilities. I'm like, okay, this is perfect. I don't need to form a new habit. I don't need to open an extra something. So, I think these 4 points are the ones that I feel will build the defensibility, and that's something we're really excited about as a VC. And I think the metric will prove that you have a product market fit anyway. If you build something people want to use that solves a person's pain point, people will be coming over and be like, please take my money. I want to use your tool. So when we see that natural pull versus push from the startup, I think there's something there.
Yeah, I can totally resonate with that. If you can build an imperfect MVP and people are still begging to pay for it, I think that's definitely an early strong signal of a product market fit. And there has been this idea floating around that the speed is the startup's only moat. Do you think that's true that in order to win this AI race, that startups need to fail fast and build fast?
Yeah, I definitely support like being the first mover in a way, because let's just use us as an example. As a busy-minded professional, we do not have the time to evaluate 10 different tools and decide on the final one or two to try. So for startups, they need to build super fast. They need to go to market super fast, and they need to scream as loud as they can to get your attention, because it's all about attention economy. Like which ones get onto your radar, you're probably going to think about that one when you are looking for a product or service to try. So being the first to market definitely has a huge advantage. Then it's important that you don't screw up and then you retain your customers. Otherwise, you will just be accumulating lessons for the second mover in the category. And to me, I feel that the current market really prioritizes and give those who can tell a good story the advantage. For example, A16Z, they just launched this new media fellowship program where they're designing this 8-week program to give founders, builders, operators an opportunity to really hone in on their narrative skills because that's super important in this day and age to help capture your users' attention, to build your own community, to build your brand, to create legitimacy, because all of those are important for people to give you a chance to try out your product. So for sure, company need to ship fast, but also build their narrative, build that stickiness to get people's attention.
Yeah, totally. Attention is everything. Whoever wins the attention often wins the community. So I want to know from your perspective, should startups focus on building the product first, or it's actually better to build a community first, then create a product for that community?
I think maybe just picking on the community part, I think community is a lot more important in Web3 versus non-Web3. I think for startups, you just need to experiment with just experiment and test out your product ideas with a small subset of friends and family. Do some initial go to market on X or Blue Sky, which by the way, Blue Sky is our portfolio company. Get some eyeballs, get some attention, get a wait list going. So I think founders should definitely do that. For Web3 founders, find a community that you want to plug into. For example, if you're building games, probably want to choose an ecosystem that is very friendly and mature for gaming. So Solana is a very good layer one for people building games. So yeah, I think both are important for different types of founders.
Yeah, in terms of community building, I don't think you need a 100K followers to build a community. I really love the idea that you only need 100 true fans to give you the initial feedback and the momentum so that you can continue to iterate from there. So, if you look at the current economy, do you think it's actually tougher for startups to raise fund? Or do you think it's much easier because now we have all these AI tools and resources? So the other day I was interviewing another YC company. Both founders, they were first-time founders. They had no idea how to raise fund. So they created a little tool to simulate a dozen VCs to help them sharpen their pitches. And finally, they closed the C round. So do you think these AI tools actually made startup fundraising much easier nowadays?
I think it's both easy and hard. I think the easy part, what I mean by that is there's a lot of interest in investing in AI startups. So there's a lot of capital available that want to deploy for the right product. So it's definitely easier than before because everyone's ready and a lot of people are capitalized. I think it's harder for startups to raise capital now because the bar is a lot higher. Because it's easier given the maturity and tools and resources available to build something really fast. But then if everyone can move very fast, then you're competing on who can move the faster or the fastest and who's building the product the best or better than the other ones and who's getting that early product market fit signal. So I think the bar just moves up a lot higher. And not to mention, maybe just to go back to your earlier question on AI bubble. AI bubble is something that's been talked about right now. And as venture capital professionals, everyone's thinking about it. And therefore, they are probably a little bit more cautious. So we've all seen these headlines in the news of companies raising $200 million on a billion valuation. So it sounds a little too frothy, sounds a little too rich. So a lot of VCs are trying to think about, okay, well, we still want to make the returns for LPs, and therefore maybe we want to consider startups that are not raising on a hypey narrative on a super expensive valuation. So I think the bar for startups to build to a point to differentiate themselves is higher, and to compete for capital at a reasonable valuation is also higher. So, it's a bit of a mix.
Yeah, initial capital definitely helps startups accelerate both product building and the go-to-market. I want to know your take on Web3. Do you think Web3 can be a meaningful channel for AI startups to build community or even raise capital? Because I've seen there are quite a few AI startups recently pivot into Web3 and AI projects.
Yeah, that's very interesting. I think it depends on what you're building, and does it make sense to tap into Web3? I think when we make our whole Web3 and AI investments, whether it's Sahara AI or Zero Gravity or Hyperbolic, we're looking at like, does it make sense to have a Web3 angle? And if they have a token, like what's the utility of the token in this type of model? We don't you don't want to say or explore a Web3 or token for the sake of potentially broadening your maybe marketing outreach or building community. I think it has to make actual business sense. So like how I see AI interact with blockchain is, for example, decentralized infrastructure. We invest in a company called Hyperbolic. It's like a decentralized GPU marketplace, allowing people to tap into the networks of GPU providers that are scattered in different places, and so it's a little bit more agile use case for founders that may not be able to pay AWS or other GPU providers a fixed upfront fee, but leveraging this decentralized resource in a smart and agile way that works for everybody. As an example, we mentioned earlier about the importance of data, and being able to collect data that are a little bit more unique. So how do you incentivize people to give you that data? You could introduce like a tokenomics mechanism using token as a way to solve the cold start problem. You find a way to pull in suppliers of data. People want to sell their data in exchange for a token. And then you can collect these data and sell it to vendors who want to purchase these data for their model training, for example, and they're willing to pay the token. So these are two examples of why it makes sense to have a decentralized infrastructure or having a token play, because it has a utility in the business model.
There are definitely a lot of Web3 projects trying to combine those two hottest narratives like Web3 and AI, but it's actually crucial to distinguish which ones actually deliver the real utility and value. And I agree that for startups, you shouldn't raise capital just for the sake of raising capital, because nowadays it's much easier to ship products. Unless you are a motor company, you don't need massive GPUs to build a working MVP.
Yeah, I think people can definitely use leverage the AI resources to now tinkering with different cool ideas. I think the maybe going back to like the moat and defensibility, if you just have a feature, I worry that might be easily killed at the next model update of any of these big foundation players. But I think it's wonderful that we have the opportunity and the tool set now to test out these thoughts and tinker with products.
I think for vertical SaaS companies, there's a huge advantage where you can move fast by building on top of existing foundation models. But you should also think a few steps ahead, like what will the foundation models look like in the next 6 months, so that you are not building a product just for now. You're building a future-proof product because these model companies, they continuously integrate those features. You need to make sure when the next generation models release, your product is not going to instantly become obsolete.
Yeah, like how OpenAI hired over 100 iBankers to train or to work on their finance product. I feel like we really need to anticipate maybe the next moves of these big model players.
So for founders who want to be a part of the AI First Fund, what's the best way to get involved? And which stage of AI startups are you most interested in supporting?
Yeah, absolutely. We're focused on C to Series A stage at the moment, and I would love to get in touch with any founders that are building in AI, whether you're building AI infrastructure, you're building AI tool sets, you're building AI for lawyers, doctors, accountants, AI for knowledge workers. If you're building at this exciting time, I would love to get in touch. You're very welcome to find me on LinkedIn.
Yeah, we've covered from the mindset of great founders to the edge of the new AI frontier. It's been an incredible deep dive today. Thank you so much, Sophia.
Yeah, thank you, Boyan, for having me. It's been a lot of fun chatting with you on a lot of things that's been on my mind, and appreciate you sharing the thoughts and sharing ideas with everyone.
I hope you enjoyed today's episode. Please like, subscribe, and share with your friends. Every follow will help us make better podcasts. I'll see you in the next episode.